FHA is not a first-time buyer incentive or a first-time buyer grant. This is actually just a mortgage loan.
Welcome back to Hash It Out. I got a special guest here with me today. This is Greg Lewis, mortgage lender. I'll let him introduce himself a little bit more.
Hey everyone, I'm Greg Lewis, loan officer of Fairway Mortgage. If you're not familiar with Fairway Mortgage, we're not a bank per se, we're a strictly residential mortgage company. I'm one of a few loan officers that predominantly serve in DC, Maryland, Virginia areas. Anything residential related, I say if you can live in it, I can get it done in terms of financials.
All right, that's what's up. That's what's up. So look, let's just get into it, bro. Like, I just got some regular questions that the people sometimes just want to know.
Yeah.
The thing I hear the most, man, is almost like, where does my credit need to be at?
Yeah. So that answer varies, man. FHA guideline, at least for us, we'll take a minimum 580 credit score. USDA is preferred as 680. Even though guidelines will say it's 620.
Mm-hmm.
Some banks will say 600, but for you to get best terms, and I'm talking about competitive interest rate, beneficial mortgage insurance, conventional, it's preferred that you have a 680.
Okay.
VA, similar to FHA, we'll go as low as 580 credit score. And then USDA is the specialty loan, 620 credit score.
So I work with a lot of first-time buyers, as you know, because we done slam dunked them together. You know what I mean? Plenty of times. What are some of the programs that they can take advantage of? I mean, I'm always hearing like first-time buyer this, first-time buyer that.
So grants are all over the place, and how I explain to clients, usually on our initial call consultations, that all these programs don't work the same.
Yeah.
All right. So you usually have your state bond products. This is your Maryland mortgage program.
Familiar.
That pretty much you can live anywhere in the state of Maryland. There is typically a second lien on the property. And then as you filter down, you have what I call like your community and maybe county or city grants, where they may be true grants, but is specific to a certain area.
Gotcha.
All right. And then as you get even more specific and filter down, you have your neighborhood grants, and these are predominantly seen in areas like Baltimore City.
Gotcha.
Certain zip codes, they want you to live in a certain block where they're trying to increase home ownership there.
Gotcha. So is it just they want to increase home ownership, or they're looking for the median income to go up? Is there a little bit of both? Or?
Yeah, I think it's all the above.
Okay.
Both of those examples are true. So it's the government way of saying this area is probably underserved in home ownership, and they just want to increase that.
All right, so another big thing that I hear, like some people where, maybe they make $30,000 and their friend bought a house and they're making $50,000 and they want to buy a house and they can't qualify. Can you explain debt to income ratios a little bit more?
Yeah.
For FHA conventional.
All loan guidelines have different debt to income ratio requirements and different DTI limits. How much your debt to income ratio can be for you to be eligible for that guideline. And let me explain what actual debt to income ratio is. So DTI ratio, this formula that buyers hear about so often, is that pretty much how a lender assess if you can afford this house or not, right? Not what you think by just a formula that is really risk-based when you afford a mortgage, all right? And that is your reoccurring monthly debts, everything that shows up on your credit report, your auto loans, your credit cards, your any line of credit you have, collections, anything that's attached to your Social Security number outside of your utilities, things like that. All right. On top of the new mortgage payment of your new house that you're getting ready to purchase, divided by your monthly income before taxes.
Okay.
All right. And that should not exceed, typically, at the most, more than 56%.
So people whose debt to income ratio is a little too high, is there like, what type of tips you typically give those people?
Yeah.
Other than make more money.
Yeah. Make more money is always the easy cure. But it's typically either one, paying down some debt. Typically buyers have some miscellaneous credit cards that they can easily knock out. Another easy resolve is, and this has been seen a lot over the last year, so just buying down points.
Yeah. Okay.
All right. What that means is, if your interest rate is, let's just say 6.5% right now, there's a cost to get into, let's just say 5.5%. All right, and the reason why we went to 5.5% so we can get that DTI lower.
What are some other questions that you think, a lot of first-time buyers, even second-time buyers may give you when you're getting a call? I know it got to be some repetitive stuff.
Yeah.
Like every single time you get a call.
Yeah.
Same question.
I think the most common question that I get for first-time buyers is, can I have a FHA loan because I'm a first-time buyer? And I'm like, one, I always applaud them for doing some research,
Yeah.
but I have to explain that FHA is not a first-time buyer incentive or a first-time buyer grant. This is actually just a mortgage loan.
Yeah.
And it's not necessarily paired with the grant, or it comes with some extra money. It's just a government-backed mortgage that typically is a lot more lenient for folks that don't have the best credit, resume, and or financial history.
That makes sense.
You can be a repeat buyer to get an FHA loan. And I think, well, I know the government's perspective on creating an FHA, a government-backed mortgage, that for folks that, again, don't have best credit, they don't have the 750 or 800 credit scores. They're not making $200,000 a year. Or even if they don't have the best credit, FHA is in place to give them a shot at home ownership.
Yeah.
All right, but it's not a grant.
That's good. Thanks for clearing that up.
Yeah.
I mean, can you tell any times where like you've seen in your clients maybe house hack, bought like a 2, 3, or 4 unit using the FHA loan?
Yeah, definitely, man. And that's another incentive of FHA. I probably do this maybe several times a year.
Oh, that's good.
Yeah, several times a year where a client, they get the benefits of using the FHA loan, buying up to 4 units,
Okay.
and still having the minimum requirement of 3.5% down.
That's good.
That's a cheat code.
That's a huge. I hear that you can use part of the income that you're getting from your other units towards your actual income monthly.
Yeah, totally. Yeah.
So that'll help your debt to income ratio too. That could be another little cheat code there.
Exactly. Anyone that has aspirations of getting into the investment game, real estate investment game, if you're a first-time buyer, I would highly recommend starting out with a multi-unit, because there's so many ways of getting a deal done.
Yeah.
Whereas maybe someone else, a repeat buyer, probably is a little bit more restricted.
Does the lease have to be in place to use that income, or can they just?
No.
Oh, okay.
No. We can
That's
use
fine.
projected income, projected market value income of those other such units to add on top of the income.
Can you give a little bit more information as far as on a 203K, as far as like how that can really help today's buyers with the limited amount of inventory?
How I, as a lender, approach these deals or these pre-approvals and offers, things like that, is that we're going to talk about still same process, any other like purchase deal. We're going to start with your monthly payment. Like, what are you comfortable paying with the monthly payment? All right, if it's $2,000, $3,000, all right, that's going to automatically tell me the purchase price.
Gotcha.
All right, so from the purchase price, I know the client, myself, you know the cap that we can go to. If it's $400,000, that means we cannot get a $300,000 house retail price and put $200,000 work in it.
Exactly.
All right. On top of that, I'm also collaborating with you because I'm going to need the comps. All right. We have a lot of indecisive folks that have just aspirational dreams of what they want their house to look like, but it makes no sense if the house is not going to appraise for it.
Right.
So a lot of those things put together allows me to say, Mr. and Mrs. Buyer, you're pre-approved for $400,000. All right. You can find a house at $300,000, but I would recommend for your renovation not to exceed about $60,000 to $70,000.
And we appreciate having you here today, man. This interview should help so many people in their home buying journey and throughout this whole entire process. Thanks for stopping by and giving these people these nuggets. You know what I mean? This is what they need.
Yeah, I appreciate it, man. I appreciate you having me.
All right, y'all. We're gonna get on out of here. Make sure y'all stay tuned for the next one. Peace.